Welcome back, everybody, to another weekly recap. This is going to be the fourth recap since I started fully living out of my brokerage account, no longer using a traditional bank account, and now putting all of my income into the brokerage account. As always, I'm going to go through the dividends I received this week, the options trades that I made this week. I'm going to go over my BITX position and how I managed that this week and how it's doing, and then go over some of the other things like deposits and things I purchased as well. First, as always, a quick review of what the goal of this account is. So this is my strategy for how I'm living out of the account. All income that I receive, W-2 or anything, goes directly into my brokerage account, not a bank account. So you can see here it goes in the brokerage account, and then this is how it's broken out. 50% of it's going into high yield assets, 25% of it's going into 25% is going to dividend growth assets, and 25% is going into just straight what I think is growth assets. 50% of the net value is used to sell puts. So I want to, and it's the net value. I want to be clear about that. And then all income generated pays down my monthly expenses. So that's dividends, options, premium, capital gains. While expenses are more than income generated, margin pays the remainder. So dividends pay my bills. What the dividends don't cover, because my dividends are not more than my bills at the moment. Eventually they will be, but for now, the rest of my bills are paid by margin. And then eventually the income generated, the dividends, the options, all of that will the amount that's generated will be more than what my expenses are per month. And then that's when FIRE is achieved. So I'll jump right in here and go over to what we did this week. So I'll start with the dividends. Going here, this is this week. Received WPay dividend 146, YMAX 3146, ULTI 9030, SPYI, this is a monthly payer, received it today 5268, QQQI, newer holding, also a monthly payer 4447, XDTE 102.99, Misty, now a weekly payer 115.65. And then going into the options trades that I had open from last week. I'm not going to start with BITX. I'm going to get into that in a second, but I had an open put on Target that I was able to buy back today for $1.01. So return on investment of 0.51%, simple annual return of about 26.5%. Not bad considering I sold it at the 18 Delta. And then I also had two open puts on NVIDIA, strike of 170. Expiring today like the rest of them, and I paid $1 each, so total of $2.02 to close it, to buy them back. Return on investment for this particular trade was 0.45%, and if I did this annually, if I was able to make this same trade 52 weeks out of or every week, so 52 weeks in a year, I would have a 23.20% return. Now going into Starbucks. So I had some open covered calls on 200 shares of Starbucks that I own that I don't want to lose. I want to hold on to them. I had an 85 strike and an 87 that were rolls from the previous week. I had to roll them again, or I had to roll one of them again this week. I was able to, I had an 87 strike call on one of them that I was able to buy back today for $2.01. So I did that, bought that back. And then I had to roll the other one because it was at like 85.40 or something like that. So it was a little bit over, 86.40. So it was like $1 and some change over my strike price. So I really didn't want to roll it. Their earnings are next week. So I didn't want to hold the shares through, or I didn't want to hold the call through earnings, but I didn't really have a choice on this unless I wanted to buy it back for a pretty hefty amount. I decided to roll it. And I paid $129.66 to roll, so I bought it back for that amount. And then I subsequently sold the call, the new call. I went all the way up to the 92 strike, so I was at 85. I went all the way up to the 92, expiring next week, so right after earnings. And I received $132.34, so I received like a $4 net credit, less than that even after fees. So I wasn't really trying to make any kind of money or any kind of premium on this roll. I just wanted to get the strike price as high as possible without having to pay anything out of my pocket, and I did that. I still received like $2 or $3, but I was able to roll it up by 7 7 strikes, which is $700. So the reason why I did that is because earnings are coming. If they have a blowout earnings report, then and it goes up past 92 by the end of next week, and I lose the shares, well, I made a $700 profit on it, because I think my cost basis on these 100, I'll have to double check, was 85 or 85.50, around there. So I'll make a pretty good profit, capital gains on that, and then I can just buy the shares back later or put it into something else. And if their earnings tank, then great, the call will expire worthless more than likely, or I can buy it back, and then I can buy more shares if I want to. So that's how I played it this week. We'll see what happens with earnings and all of that next week. So going to the last position from last week here, I had BITX. I rolled that. So I paid 305.66 to buy it back, and then subsequently rolled it to a week later, obviously, to this coming Friday, which is Halloween here in the US, the 31st of October, and I was actually able to roll the strike price down by 1. So I went down from 53 strike to 52, which was good. And then I real quickly, before I jump into the other ones here, I'll show the BITX position. So you can see here, today I rolled it. I paid a total of 305.66 to roll it. And then I subsequently sold the put here and received 364.34. So a net credit of 59-60 bucks or so, roughly. And then what that did is it dropped my now break-even strike price by $2.10, and I was also able to drop the strike by $1. So if I got assigned today at the new strike of 5,200, my break-even strike would be $49.90. So instead of having to sell covered calls to get out of this position at 52, a 52 strike, I could go all the way down to a 50 strike if I wanted to just break even and get out of all of this altogether. So I'll keep tracking this, see how it does next week. Eventually I will get out of this. Until then, I'm just collecting premiums, and I'll use that to lower my cost basis. And then if it rises, I'll make a decision on if I want to just get out of it, or if I want to try to make a little bit of capital gains on this position as well. It also pays a dividend, so I want to be wary of that too. It pays a pretty good dividend, actually, so I'll keep an eye on that. Going back to the spreadsheet here, the trades, the options trades that I made today. I really wanted to sell some puts on like Amazon, Google, maybe Apple, things like that, tech stocks, because I think that a couple of them are undervalued relative to the market. I know the market is high right now, so I don't want to sit here and say that they're a good value or anything like that, but the PE ratios on them are pretty decent in my opinion. I like Amazon's price right now. I like Google's price based on how I think they're going to do in the future. So I really wanted to sell puts on those and some others, but they all have earnings coming up this week, and I don't want to sell puts over or through earnings. As I just mentioned with the Starbucks calls, I didn't want to do that. So I had to really kind of scrape and see what I could find as far as what I wouldn't mind owning, what I think is at a good price. Started using some screeners and things like that. So I came across CRM, which is Salesforce. I actually use Salesforce in my day job, and I've used it a lot. I've been in sales for a good part of my career, and I've used Salesforce a lot. So I'm very familiar with it. I'm very familiar with the stock as well. But I sold one put at the 18 Delta at the 245 strike, expiring a week from today, and I received a total of $126.34 in premium. I also have started to use a little bit more technical analysis, looking at 200-day moving averages, 52-week lows, things like that, just to try and help aid me in like what I should pick for deltas. I still want to be really conservative, but on CRM there was a good reason to sell this strike, because it was like just above a moving average or something like that. So I'm going to use that to try and aid me as well in picking the best strike possible and being as safe as possible, to not get assigned. Obviously, I'm okay if I get assigned on any of these, but I don't want to get assigned. The idea is I want to keep selling puts and collecting premium and never have to go into margin, for puts at least, or for options at least. I'll use margin obviously to pay bills and stuff, but going to the next one, Target. I've been doing this one for a while, and I continued. I just still like the price. It's starting to get a little bit more positive sentiment around it, so that has been driving the price up a little bit. So we'll see. They announced some layoffs in corporate, which it seemed pretty favorable to shareholders because the price has been going up. So I think it's still at a pretty good floor right now, which means that it has some room to run up still. And it's at some pretty pretty relative lows. So sold another put on it at the 18 delta. I had it on last week at the 87 strike. I did the 91 strike, and then expiring a week obviously, and I received 45.34. Procter & Gamble, again, I was trying to find some stocks I wouldn't mind owning that didn't have earnings coming up. Procter & Gamble actually reported early this morning, today, I believe, had a good earnings report. It ran up a bit, and then it dropped pretty substantially. And it came back to it seems like a support level. So I sold a put around that strike at 149, 18 delta again. That was kind of the theme today. A week from now, 47.34. So a total on the 3 new put options that I sold today was $219.02. And then obviously the other stuff that I rolled, I had $715.70 in premium, and in dividends I had $584.26 in dividend income this week. So that brings my total for the month to $3,052.59. Options is $13.80, dividends is $16.72. The weekly deposit for this week that I put in was $3,629. And in open put, so the open put positions I have open, the BITX position, the CRM target, Procter & Gamble, is $53,700. So if I was assigned on all of those tomorrow, this is the cash I would need to buy those shares. Lastly, going into the portfolio here, the total gross value of the portfolio is now at $106,607.04. I'm always going to report on the gross value. Some people report on the net value of the account, like subtracting out margin and stuff, but to me, I'm shooting for a gross value amount, so I'm not really too concerned about the net value because I can pay the margin off anytime. I can stop funding this account at any time and use the dividends and income to pay the margin down, or I can use my income to pay the margin down. So to me, I have a gross account value number in my head that I want to get to. And once I get to that, then I feel like I can move assets around and, get them to the position I want to for the income I need. So I'm always going to report on the gross value. So right now it sits at 106,607. I mentioned, I think it was last week or the week before, that Misty going weekly kind of messed up some of the things that is reported. So it was showing like a 40% income. That wasn't correct. I think this is more in line, 27.13%. So roughly about 28,927 annually at the moment. This is slow right now because I've been investing heavily into my growth pie. As I've mentioned in previous videos, my high yield funds right now, I want them to be at 50% allocation. They're at 58. This is down from what it was last week. And then dividend growth I want it to be about 25% allocation. It's at 32. And growth last week was lower than 9.73. So I put all of the weekly deposit, 3629.66, into growth, and it brought it up to 9.73. So I still got some more to go here to get closer to this 25. So probably for the next couple of weeks at least, I'll be putting pretty much into growth. So what did I get? I had 1 share of Google. I bought 9 more shares of Google today. I was up like 45% on my 1 share of Google. I still think it's a good price. It's a stock that I think is still going to do great in the long run, and it does pay a dividend. They just recently started paying a dividend, so there's a lot of room for it to grow. We'll see what their compound annual growth rate ends up being. I think it could be pretty good because they've got cash. Amazon, I've had 10 shares. Also today I bought 2 shares of Microsoft, just another tech company I believe is not going anywhere. AI and quantum computing and all these things, I truly believe that all these companies are going to be in on them and already are. So I like the price of it. I like the runway for it in the next 5-10 years. It also pays a pretty healthy dividend, and their growth rate is pretty high. Their average growth rate over the last 5 years for dividends is like a 10% growth rate. So this could be perceived more as like a dividend growth stock, but because it's tech and it's pretty volatile, more volatile than like say a Starbucks or something like that, I have it in my growth pie. And then I also purchased 9 shares of Google today. I purchased 2 shares of Microsoft. And then I added a new holding here call it a spec stock, if you will. And you'll notice that I only allocated 2% to it. So I'm already at my allocation for what I want to put into this. But I bought 3 shares of ASTS. A lot of people watching probably have heard of this company, maybe even be investors, but there's a lot of positivity around this company, and I think it has a really good chance of taking off. I mean, it already has taken off, but it has a really good chance in like the next 5 or 10 years to be up with the likes of these. We'll see. They have a lot of patents on their technology, a lot of fundamentals I don't really want to get too deep into here, but I like the company, and I'm going to keep it as a small percentage because it is speculative. They're not turning a profit yet. This is like a 5 to 7 year holding, I think, maybe even shorter, but we'll see. So I'm at my allocation. I'll continue to keep it at 2% for now. But that's what I added this week. And then, like I said, I'll probably put more into growth next week and probably for the next few weeks. And then eventually I'm going to get more into some other dividend growth stuff and high yield funds. I think eventually, I've got some weird allocations here, 17, 17. I like even numbers, so I want to get these to more even. I don't think I have enough dividend growth stocks. I want these to be, bigger allocations, but not 33, 33. I want these to be like 10 and 15. Ideally, I think down the road, I wouldn't want any position to be more than 5% of my holdings. We'll see how that goes. I think that's going to take a little while to get there, but for now, this is what we're sitting at. Going into the last thing I'll show real quick, the dividend calendar for this coming week. Same stuff as this week, except for I already got my QQQI and SPYI. Will not get that next week. That's a once a month payer. So everything the same: WPay, ULTI, YMAX, MISTI, XDTE, except next week I'll be getting QQQ's dividend and SPY's dividend, which I own 2 shares of both, so it's not huge. $1.39, $3.66. Anticipated 146, 121, and 198. So that'll close out October. Next week, I'm going to do a weekly and monthly recap because the last day of the month is Halloween. It is the 31st, so it just kind of works out where the 1st is on Saturday. So I'll either do it on Halloween night or I'll do it Saturday and release it, but it'll be probably a little bit longer, not too long hopefully, but I'll do a weekly and a monthly recap. So that's everything for now. I think I covered everything that I did today. Oh, and I currently don't have a margin balance still. I have a lot of bills that are going to be due next week, so this margin balance is going to jump up next week. So I'll be reporting on that a bit more. And then update on Schwab. I've been going back and forth with them for a few weeks now, trying to get an account set up, a checking account linked to my brokerage account, and get a debit card and all that good stuff. And I think I finally got there. Hopefully by the end of this coming week, I'll have all of that set up. I've been just kind of transferring things back and forth right now. So I pay all my bills on my credit cards, and then I pay the credit cards off. I'm able to float that money for like 30 days. I get rewards, all of that, and then I never carry a balance and pay any interest on the credit cards, and then I pay them off. I haven't had to pay any of them, so it's been nice not having to transfer a bunch of money back and forth. I probably am going to have to this coming week, and then eventually once I fully get this Schwab account set up, I will actually then be really fully living out of the brokerage account, but I'm just doing it through transfers at the moment. But still, all of my income's going into the account, and I'm going to be paying all of my bills with dividends and options income and margin pretty soon here. So without rambling on any further, I will catch